Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. My name is Ben Maldonado, and as always, I'm here with my partner, Barry Hederachi. We are recording here on Friday, the 22nd of November at 4:30 Eastern, right after the market closed. And on this week's show, we're going to be talking turkey. And is it the bulls or bears that are going to end up being the turkeys? We got Thanksgiving coming up, Barry, next week.
Yep.
So what say you? Or better yet, what are the charts saying? What does the geometry say as to who's going to be the turkey come the next few weeks?
Yeah, well, that's a good question. Let's see. We have a few days left, so let's see
Yes.
how it turns
Yeah.
out. So we left off last with the S&P cash 58.48 being the key level that we wanted to make sure, if we're going to stop there or not. We were watching that. Above it, obviously, is where it would be easier for the market to jump towards 60.20. And if you take the last couple of weeks after the high came in, which was part of the Rebel Yell cycle, yeah, we got a
Hmm.
little bit of a pullback. It paused right on top of structural support, and we just happened to have this 58.48 level there on the cash. And if that high was really a decent high, we would expect some kind of a lower high to come in, obviously trade lower. But there are other ways highs can come in. We could come in with a high, lower high. Obviously, that's the easy one.
Hmm.
And we could also, we also have other patterns, right? We could have a double top. We could have a false break. We could consolidate into some kind of a triangle, do a false break, and then drop out. Now, all of that can be true. And the other thing that could be true is we can pop right above and settle on top of 60.20
And keep going.
and keep going.
Yep.
Right. So these are all possibilities in our job. If we're going to trade, we really have to figure out like what's happening. And at the same time, we have to pause when we have to pause and not do anything when we're not clear and take action when everything matches our system. That being said, what we left off with to really try to isolate this next the lower high, if it's a lower high, whatever is coming up next, we want to isolate that. And if it's going lower, we want to be able to trade that. But if it's going to blow up, get on top of a 60.20, obviously we want to trade that also. So those are sort of the couple of things we're looking at. Anything you want to add to that, Ben?
No, I think you and I have been talking about this. We've been
Mm-hmm.
saying, okay, what is more probable now? And we don't have a higher probability. It's a coin flip here. Do we get a lower high or do we go make another high?
Mm-hmm.
You know?
Yeah, yeah. And as you know, we really stick to the technicals, and we don't really bring in any news. And I think it's amazing with the kind of news that's happening. Here we are, just rallying the entire week.
Right. Right. World
And
War III is bullish.
well, it reminds me of sort of that wall of fear, back
Yep.
when Iraq was, that whole Iraq thing was going on. I remember we kind of traded lower into that and then started rallying. Do
Yep.
you remember that? So
Agreed. Yep.
a little bit like that. So anyway, either way, I mean, the thing is, for the last 3 weeks, we're bringing the same range between the exact same two levels and what to do, right? It's 58.48 and 60.20. We're exactly trapped between these. And these levels we've had before even price got there. And it just seems like the price got trapped in the zone. And
It's funny you said we've been there the last 3 weeks. The powers that be are letting the Bulls get as much as they want, and the Bears get as much as they want.
so far, yeah, right. And if
Yeah.
we
Yep.
somehow make another, going to consolidate here, probably get the Bears get another shot at this. Um, but either way, I mean, if you look at this week's market action, which we'll look at the 30-minute chart in a little bit, wow, what a whipsaw
Hmm.
before a little bit of moves here and there. But anyway, we'll talk about that in a minute. So far as the cash goes and the daily chart, really not much to do. We're really watching between 58.48 and 60.20. We're expecting a lower high only because of all the evidence we had at the high for a cycle high and all the counts and everything else that we had. So
Hmm.
that's pretty much the story. I don't have anything much to add to that, but we're going to look at some other charts and we'll kind of tie it all together by the time we get towards the end of the ES segment. And before we move forward, so that was the cash. Here's the Dow futures. And we looked at this level last time, this 44,300. That was a critical level. And so is the 50% of the square, which we didn't hit the first time. And that's, 44,850. And this, I think, Ben, I think you called this the kill zone last week.
Yeah,
So,
yeah.
and so we'll see what happens. It's funny, I drew this expanding triangle and this is on the daily. We had the exact same thing happening. This pretty much the exact same pattern was happening in the ES, the 4-hour chart, right?
Mm-hmm.
We had this kind of expanding triangle. Of course, from here on, now we're making higher lows and a lower high. So we're trapped in here. Didn't quite get to the 50%. I mean, I would like to see, it would be cool to see it hit the 50%, do a false break and turn. If we're going to go down, that would be a classic sign. And speaking of false breaks, I'm also going to look at NVIDIA chart just really quick, briefly, because we covered that this Tuesday. And we mentioned the false break. So I wanted to show how false breaks can come in.
Mm-hmm.
So
I think that's good to see, especially how important that stock is to the indices right now.
Exactly. And false breaks can happen, happened. I mean, here's one classic one right there, back in 22. Another
There's
one.
one in October right before the run. Look at that.
Yeah. I mean, right here, right?
No, down
April and also October. Yep. Right
October of 23.
23. Yes.
Look at that one. Yeah.
Classic. I mean, they're everywhere. That's the thing. When you start
Right.
finding them,
Right.
you see them everywhere. All right. So that's the Dow. Let's get back to I have another chart for the futures. Let me switch over really quick. We might as well use this. It's the same chart. And here, a few things going on. And I think the main thing is, we've been hopping on this for a while, ABCD completing up here. We had the Gartley finishing up here. And we had a 120 by 150 coming off of this April low, squaring out at the high. And the whole business after that was to see, where is this lower high going to come in? And I remember, Ben, you talking about, well, it'd be great if we can go up and hit the circle before we drop.
Right.
And sure enough,
we're heading towards it.
We could definitely do that.
Yeah.
And maybe even a false break there.
Yeah.
So that's that. And I have a 1x2 line drawn up here, and that just happens to be right in line with the curvature of the circle. So that might be something. Anyway, we're watching that. To say a lot of things completed. So now it's just the sort of it's just, killing some time for the next part of the market to unfold. So far we've been lucky. We kind of got the high, we got the low. Now we're waiting for the counter trend to finish up. One thing to notice, we had an inside bar. If you go back to Wednesday, and this inside bar theory worked out again. We took out the high. Sure enough, we had followed through for 2 days, and maybe even a little more. So we'll see how that works out. Let's take a look at the weekly. Here's the weekly ES. Again, pretty much the same story. We're 3 weeks in the same area. Didn't quite get up to the big ABCD that's here, and that level happens to be right around 61.33. Just so you know. But Ben, one thing to recognize here is that we're holding above this 144.
Sure.
We have to take note of that. We talk about holding above or below and all this. So here it's definitely holding above 144. But then you have to look at, well, if it's holding about 144, what else might be happening there? And a good way to check that is to what I like to do is switch different squares to see what else might be, going on. So if you put the 90, we're up 3/4 of the next square. So 1 and 3/4 squares. 60, not much, but this is a weekly chart. So 52 is important. 52 weeks, 52 square. Again, talked about it a lot. 104, we missed by a couple of bars, but we did hit, 3 squares up, right around 59.81. So I would say it's 59.83 or so. So the weekly square is hitting pretty right on. Well, that's the biggest thing we have going. But I think the weekly also can't be ignored. You know what I mean?
Sure.
So we do have some things there. That's why it's stalling. Thing to remember now is it's above 144, and we've held it there pretty well. Didn't even come back for a check back here. So again, we'll try to tie this up by the time you finish, but that's definitely something to keep in mind. All right, let's get back to let's take a look at the 30-minute. So here's the week.
Oh, look at that ceiling.
Yeah, look at that, right? So pretty good for Friday. Now you know
Hmm.
why I had one 59.92 in larger fonts.
Sure, sure.
So we don't miss it. So we started the week. I think 59.02 was the big level to watch, and 58.69 was the big support area. Sure enough, we tested that, got on top of 59.02. That was the first sign. Really tested it here, got on top. So once we started holding above that to start making higher lows, we were really looking towards to see if we can hold 59.48, which, a little bit of a battle here on the 21st, but then we got above overnight and held it. And at this point, we were looking for it to rally and test 59.92 or the 60.15. And I didn't realize how strong the 59.92 is, and really didn't even need this little bit of a zone. And, it held its
Hmm.
own.
Hmm.
But this brings up another point now. Of course, we have a ascending triangle. So what the hell happens here? Two things. Either we can do a false break out and fail, right? Which we kind of go pop and then, fizzle out, roll over.
Hmm.
And the other is to actually do a breakout, do an ABC and get going. So this is what we're left with for next week, which is really almost a coin toss if you're only looking at the patterns in isolation, right? I mean, look how much time we kind of spent today banging up against that 59.92. So it goes without saying, obviously that's the level to watch next week, at least Sunday night, Monday. We want to watch this. And the 60.15, I wouldn't throw out with the bathwater, so to speak. I want to keep that. This zone is really important. We could come in here and fail. This is a good, well, we talked about where can these counter trends fail. Well, this is definitely a good failure area, this zone here between 59.92 and 60.15. And that's why it marked it up. The other area was this 59.48. And obviously we didn't do it there.
Hmm.
And if you're really going to go for it, then we have the 60.84 for
Hmm.
whatever reason, And so we have other levels above that. So, okay, so for next week, how do we wrap all this up? We talked about a lot of things, but everything in the past, everything that's happened up until now, we cover it pretty much twice a week. So if you guys want to check those videos and see how we're kind of threading this and watching the markets, what it's doing, how we're looking at the probabilities, right, of what might be happening. And if you like our work, reminds me, click the likes, click the alerts, and subscribe. If you subscribe, I think you get the alerts right away, right? When we put up a new video, I think that's part of the subscription, right,
Hmm.
Ben?
Hmm.
What you're saying, you were getting some on your phone, right?
Yeah, they were sending them to me.
Anyway, share the videos. That'll be great. So for next week, to wrap it all up, obviously follow the story up to here. And I think next week being a short week, and being, normally we could have a positive week right before Thanksgiving. That's part of the package. We didn't turn this week. We actually, made higher lows and higher highs, and it was it's a super sloppy, rough uptrend, but nonetheless, it was an uptrend. But the fact that we stalled out at 59.92 like this, a couple of things to watch for Sunday night, Monday. If we get on top of this and somehow settle above it, at least for several bars, I'd really be suspicious that of any kind of a downturn, right? Because this is going to
Hmm.
be the balance point for next few days. So if we get on top of this, we really want to be careful and probably be able to trade the long side if your system's set up. 60.15 obviously will be taken out if we're going to do that. We're not going to settle up here and just touch this and roll over. I doubt that's what's going to happen. We're probably going to run up to 60.37, or if everybody's really inspired, maybe up to 60.84.
Hmm.
That would be pretty classic. And good trading if we catch those things, right? So we want to keep an eye on that. And in a way, we always joke about how prices always end up on a critical level, which to us is really only two on the chart, which is the 50% of the square and the actual main square level. And sure enough, we come up and park right up on it by the end of the day.
Yep.
So not much to say for next week, except watch this number and see how we settle above or below that. And that's really the box we're watching. To the downside, I think if you look at the consolidation, today after we broke up, to the upside, this 59.70 to 59.90, super tight range. And we have a little trend line going here. I mean, I'm just talking out what I watch during the day. So, I mean, if we would move up here Sunday, Monday without even breaking this line, I would expect the market to be very, very bullish, and I would really watch that. And if we continue to consolidate down here, or maybe go back to check 59.48 and run back up, then then the calculations change a little bit. We'll have to figure it out. We'll post it on Twitter, on X. Definitely the 30-minute update will have all the price action accounted for that happened up until the Monday open. And I know, Ben, you post your 4-hour charts and the dailies and hourly
60
charts,
minutes.
right?
Yep.
So you guys will be all up to date. So you can follow us on X. The links are in the description. And that's pretty much all we can do. And with all that drama, we're left right at the line. So what more can you do with that?
Right.
You want to add anything to this?
Nope.
I know you're going to cover Nasdaq, which was also interesting.
Very interesting spot we ended up.
So I'll leave the S&P at that. I think that's enough. And normally we jump to bonds, but before we get on to bonds, I wanted to cover, NVIDIA, right? We covered this stock only because it's a little bit related. I mean, that was the only talk coming into
that was the big issue, big item this week. Yeah,
exactly. And with the weighting and everything else, I think it's worthwhile talking about it. We covered it in pretty well in depth Tuesday night. So all I want to point out to was we were talking about one of the possible. We already had a lower high going into that, and this ties into my talk. How I was talking about what to do with the S&P. Pretty much
exactly. Pretty much. Yep.
Pretty much the same thing, because we have a high, came down. Okay, what are we going to do next? Well, here's a great example of I had to still say potentially a false break, but this is exactly what they look like. And if we took out the low of the high bar, which we didn't do today, what's really a tripwire is that we have an inside bar for the day, right? And well, we know what happens when the lows get taken out. So and we have two lows very close together. So I would watch that. And if there's another inside bar next time, great. But now basically up until the false break high gets taken out, or we settle above this 144, 148. I said 150 last week before the earnings came out. Like, we really have to settle above that in sort of a rush in order to get the momentum to the upside. Otherwise, we just didn't have the juice to get up there. So I would say long as we're below 148, it's still sort of pointing down. We had a lot of important cycles come in here,
including a 144 by 144 square.
Yes, and that's enough. And we talked about some about some other things, but I just wanted to point out the fact how the high came in, how the potential false break came in, and what you watch for next, which is really about these lows or the 144 level there. All right,
that's just classic what they do, that false break at the high.
Yeah, it's everything so far. This is all textbook, so we'll see how the thing unfolds going into next week. Let's take a look at bonds. Well, here's the futures, the continuous chart for futures. The other one was the December contract. Pretty much the same case. We have 60.26 up here, 58.92, which we held above, tested a little bit. So everything still holds the same. Here we have bonds, which, we were 45 by 45 at the corner here. And sure enough, prices got there and is really holding in a strange way. And that was on the 19th.
It's just chopping.
It's chopping. And all I can say is this is not exactly the kind of move you want to see if it really squared out, When they square out, they look more like this. We go up, tap, we're done, goes the other way. It's very clean. So the fact that we're spending, we really hit the brakes, then we slowed down, momentum slowed down, everything slowed down. And now we're doing this sort of very narrow range. And all I can say is if we, and again, here's another market closing right on the damn line. So how much can I, seriously, how much can I comment on that, right? It's
Right.
116.10. We closed at 116.08. So I would say if you're below, let's take a Friday high and low. If we somehow get below the Friday low, I think there's more downside to come. If we take out the Friday high, we have more upside. I would look at it like that.
Hmm.
And long as we're on this 45-degree line, what was it, 116.10? Obviously, it's going to be choppy. This could continue, wrapping around this price level, but watch today's high and low for some kind of directional.
It's kind of fourth wave like action, isn't it?
Yeah, yeah, definitely. So that's why you got to be careful and
Hmm.
really want to wait till it settles, one way or the other. And looking at the weekly bonds, well, to me, it just looks like, we're not done yet. And I don't think we're done till we can take this out, which is
Hmm.
below 114. So let's see what happens. What happened last week was, I remember talking about that we had an inside bar. We slightly took out the low this week. So let's see if there's a continuation of that coming
Yep.
next week, or if we're going to kind of stay within the boundaries. That's not much to say right now, because like I showed you guys, the daily pretty much closed right on the square, the 45-degree line. So we'll have to wait for that. We'll update you guys on
Hmm.
Tuesday night show. We have crude pretty much like we thought. It's still within our boundaries. Just keeps coming down towards the 60-degree line, which is 64.75 area. And consolidate. I mean, obviously, it's not going lower. It's not going higher. And we talked about how what's left is really big, continue to consolidate here. But longer we
Hmm.
consolidate here, we break to the upside. That's a really good floor. So just remember that part, right? And last time we did that, even just for a little bit, not even this really this well defined. And the first time we tapped it, we had a nice rally off of it here. Remember that?
Hmm.
We did the false break and ran up a little bit and got stuck at 79.50. So, and then we did the ABCD down into, so all that is still in play. And now we're starting to move higher. Where, in a way, we're kind of caught here between the last swing low and high, but is moving towards 73.50. Let's see if this is the magic. This is the time it's going to be able to break out.
Hmm.
So we'll wait and see.
Interesting look on the weekly crude this week.
Yeah, I wanted to talk about that. Let me jump to the weekly really quick. So a couple of things, we had a one weekly with that big circle on it. So we'll continue to talk about that. Great thing here is we know the floor, and coming off of this, we've been, people have been able to trade off that line for a while now. So I keep thinking, it would make sense for you to kind of do some kind of a false break before moving higher. But hey, it doesn't have to work that way. It could be something
No.
else. So, but what I do know is we have a big trend line here, a couple of trend lines, right? A steeper one here, triangles within triangles. Kind of happens when we're consolidating like this. So this chart is pretty straightforward. This is the other weekly chart we've been looking at, and I don't know, maybe the circle is off by a couple of pixels, but it looks pretty good at all the other lows. So
Sure does.
so it's looking like this could be like a little bit of a false break outside it, and that might be it. And now from here, we're going to go higher.
Hmm.
So we're watching. Let's see. Really, this structure gets activated once this downtrend line gets broken, which is one of those big ones that you find in commodities. Remember when all those big long swing,
Oh
all
yeah.
the grains and everything
Those
caught.
multi-year ones. Yep.
Yeah, yeah, when they break. So this is going to be a multi-year one in crude. So when that breaks, I don't think there's going to be coming back and consolidating for a while, because when they break, they really go, right? If you just
Hmm.
see how these work. Just to say that we're kind of on the circle. We kind of fell out last week, came back into the circle. Not that the circle's a big deal, but because the reason I'm bringing this up is we talked about how market has to click off some time. So we're clicking off time, and it looks closer and closer to some kind of an exit, only because the triangles are getting tighter and tighter on other like see the triangle here,
Hmm.
right? So
And then looking at the weekly, Barry, I saw that we did, even though it's still in that congestion zone, we did do an outside reversal up bar.
Right here. Yeah. Yeah,
Yeah.
that's right. Yeah, it'd be easier to see on here. Right there, right? Yeah. Good
Yeah.
catch. Yes. Yes, we did that.
So I don't know how significant it's going to be because we're still in the chop, but on a weekly basis, that's a signal for sure.
Well, you definitely want to notice it.
Mm-hmm.
That's for sure.
Mm-hmm.
So that's good. And you see how we compressed, I mean, see how tight we became
Yep.
price action. So we're getting closer to something. So we'll see how that works out.
Sure.
Next, let's jump over to gold.
Heck of a week for gold.
Good solid week for gold. Can't say that for all the metals, but gold did really well. Well, for one thing, it came, I mean, kind of a no-brainer support level there, 180.
Right, right.
And here's our inside day, whipped around and got right through the 50% level, going like there's no tomorrow.
Mm-hmm.
Also, this high did come in pretty well. So we have to be aware of a higher low coming in here somewhere, see if that's what's in the cards.
True.
But with this kind of a rally, obviously we're going to have some kind of a consolidation here. And as long as that consolidation is above 2669, gold's in a pretty firm place. It's in a good spot.
Interesting at that high, if you drop down to a lower time frame, you can see an ABCD that it was completed. Not there, but the
On
spike.
ABCD like this.
No, up.
Uh-huh. Oh, up. Oh, going up to here, right?
Yeah, yeah.
Yeah, yeah. We looked at that a while back. I think you brought that up.
Mhm.
Yeah, that's true. I remember that. So anyway, let's take a look at the weekly, which is really kind of the interesting one here. I mean, look at that. Look how fast we caught up to that big down week we had, right? Last
Amazing.
week.
Yeah.
Just really furious. It is lower high. This high did come in pretty well. And it doesn't mean if we go up here next week, we're not going to square out because we are.
Right.
So because
That's
it's
true.
144, 108 by 144 is still in place. The
Mm-hmm.
144 by 108 is still in place. So we're watching that. Yes, sure, we can go up and tap that. But really, up until we settle about 144, I'm not really looking at a big continuation because too many cycles were lined up here.
Correct.
So we'll work with that as it comes. Part of what we had to deal with. Let's take a look at copper. Copper didn't, really follow gold, but it's holding above the square line, the red line here, 60-degree line.
Mm-hmm.
And that's right at 406. And we did the ABCD down, popped up, and kind of made a higher low. So it's possible if this low holds that we move higher. We don't want to see, what would be bearish is if we get stuck under this line and take out the ABCD low, then we're probably going a lot lower.
Agreed.
So this is really a critical area to watch and how we settle above or below that. And here's another good example of, prices narrowing before a big move. Narrow, false break, boom.
Yep.
All right, let's take a look at the weekly copper. Again, we slipped below this square 144 that's coming off the 2020 low. Not the best place for copper to be. We also took out this trend line. And we have one more left if you're going to count trend lines.
Mm-hmm.
We'll see how this works out. I mean, copper is a little sloppy now. It's we're in a tight range. So let's wait for next week to see if we take out this week's low or not, because we do have a narrow week and we could break out to the upside or the downside. But given that we got below 144, I'm thinking copper is going to be a little bit weaker for a little bit longer. So I'm not seeing a lot of strength here, but not entirely completely bearish either, because we're still above the 50% of the square here, still holding a trend line.
Holding a trend line. Yep.
So right in here is okay because we have structural support right around, well, a little below 390, 393, around this low right there. So we'll watch for that. Not much actionable for now.
Another star of the week.
Dollar was great. And we met the target, right? We had that ABCD sitting up here. And sure enough, not only did we tap it, we were able to close above the 60-degree level, and hit the target and jump above it. So
Right.
all kinds of mayhem. So dollar really, really, really ran up. And now the whole point of me talking about yeah, we're going to take out this low is to see if we can do a false break. And
Hmm.
that's very possible. So, really watch out for this. Now we want to make sure that we hold above this 107.10. Let's just say 107, but a little bit of safety, right?
Hmm.
We want to hold about 107, and really not just hold, but settle above it to start up the next leg. And if we settle above here, I'm afraid it's going to be very good. I shouldn't say I'm afraid. I'm afraid it's going to fly. Is what I was going to say. It's going to
Hmm.
be good trading, but it's going to be a good continuation. And then the next real stop is 113.75. Which is kind of where we were in 22.
Yes.
Interesting how some of the things are repeating, like 22
Hmm.
happening here,
Hmm.
and the dollar finding strength.
And look at that base, that full square consolidation that's been going on for a couple years.
Yeah, I'll tell you.
If
Yeah.
if it holds the breakout, there's going to be a lot of energy behind that.
Plus, if this, well, when we get to the here, let me go to the weekly chart.
Mhm.
So you're talking about this, right?
Exactly. Yep. If it stays on top of that, man, that's a hell of a springboard.
Yeah. And if you guys wonder why we always talk about squares and lines, and I mean, look at how this week's low hit the 50% of the square perfectly,
Hmm.
and then went up to the 2/3 perfectly. That was basically the range, right? Half to 2/3. And so what Ben's talking about is actually a really good point. If we break out here, this 50% level, let's say 106, let's say 106 becomes super good support, which means we might have a hell of a lot more upside. Just saying.
Yeah, because you've had all the players in the market have been messing around with this half square for 2 years
Mm-hmm.
in
Yeah.
that range. And
Mm-hmm.
now if this is a breakout and we truly hold above that range, it's going to change everybody's perceptions and they're going to want to own it, right? If you were short, you got to cover. If you were long, you're emboldened and you want to keep going.
And if you're hedged, you're gonna have to adjust your hedges.
Yeah.
So
Yeah,
a
because
lot of,
and this is what happens in commodities, right? You get those multi-year consolidations and then the breakouts are powerful.
mm-hmm, mm-hmm. So yeah, we're definitely in play here, especially about 50% of the square, which is, let's just call it 106 for ease. So it's easy to remember. Above 106, this thing's primed, and we can definitely go up and tap 112, which is
Mhm.
180 degrees from the 2021 low, where all this action sort of started. So we can do a little bit of a deeper dive into the dollar next week, next Friday, since we actually made some new highs here for the year. It's
Mhm.
time to take a look at that. But for now, great. And if you guys have been watching, we've been bullish the dollar, and especially after the false break here, and look at that. Perfect. And I
Mhm.
hope you guys were able to profit from that. That'd be sweet.
Yep.
I don't see how you can't. You throw anything at the dollar, it goes up. All
Here's a
right.
good
So
here's a good example of what happens when a ABCD gets violated.
yeah, really good example. And pretty much the same story. If you guys have been watching, this was a level we were wanting to see if we can hold above, which it didn't. Started rolling over. Then we were watching the 109 level, slipped through. 108 was there, came back to 109, where we were looking for it to be resistance and looking for weakness below 108. And there it is. And this is a good reason why you don't have to catch it exactly at 108. We took it out. We had a nice inside bar, took out the low. I mean, you had like a couple, 3 days to prepare for this, right?
Mhm. Right.
So, and after that came back, couldn't really get above the 50%, slipped again. And now that we're below, even the ABCD got taken out. So now we're weak, and pretty much looks like we're going to go up and do the 72. And if that's the case, the target looks like it's something around 102,490, let's say, somewhere in there. We do have some old support levels here. You can see, we bounced pretty much off the same. You see that 103.50 area back here, this low,
Mhm.
back in 22. We had a double bottom kind of thing there. Slipped through. The high was in the same area. So this area we've been wrapped around before. So now we have to see, if it's going to slip through like last time, or something else is going to happen. So for the euro, that's pretty much all I have. I think we have a little bit lower to go. Ben, you have anything to add to that?
No, I think we're good. It's respecting the levels well, and it's weak because it's below important levels.
Mm-hmm. and we'd be 360 high to high come December.
Mm-hmm.
So that might be interesting to go from that high to that low in a 360.
Yeah.
If that's the case, to square out, we'll have to get down to about 102, 180, 02, 180. So let's
Mm-hmm.
see if that happens. Either way, you guys are all up to date now. Let's take a look at the weekly euro. So here's the big trick, right? If we
Pretty
get
important spot.
very, did you notice how like
Oh my
most every
God.
chart is closing at
Crazy.
exactly on the level?
Crazy. Crazy. Crazy.
So anyway, this is pretty much 42, 45. That's the 50% line. And we only had one correction on the way down. So it looks rather weak, if you ask me. And if we slip below and get stuck below this 4180, 04188 level,
Mm-hmm.
I would expect much weaker conditions coming up and probably a test at this level, which we've been talking about, but it hasn't quite happened yet. The key thing was to take out this 50%. And this could be a false break to the downside, much
Yep.
like the dollar could have done one to the upside. So we got to watch it, get a little bit of clarity. But the great thing is once it's resolved, you can see how much time we have to trade the other direction. So there's plenty of time to trade it. We just have to figure this out, wait for this, only because, as you can see, the close is right on the line. So not much we can do.
Mm-hmm.
That's kind of rounds it up. You're going to cover natural gas today?
Yep. Had a nice week.
Yep, very good week. And Hang Seng, pretty much.
Ooh, do or die spot. Another market that closed right on the
Yeah,
line.
exactly. I'm telling you, man.
Yep.
This week's been one of those weeks. Everything's on a square.
Mm-hmm.
So here we talked about 19,450. If we can get up there, which we did for a while. We did pretty much the
Held it.
entire
Yeah.
week, except for today. And then the others, really the square level, 72-degree level is 119, 190. So, what can I say? We did 36 days down pretty much
Mm-hmm.
from here to here. So
Yep.
we could be squaring out. And that could have been sort of a flush. So we'll watch it. If we get below this,
It's trouble if it gets below that level.
if it gets below that, I think, yeah, we're definitely markets. Hang Seng's in a little bit of trouble.
Mm-hmm.
And the next support level is probably going to be this 18.
Hey, did you do a big ABCD from the
Did I
January
draw
low?
one? No, I didn't draw one. Hold on.
From the January 24 low to that May high to the August low? Was
I
that?
mean, going up to
Yeah, going
this
up to
way?
into that high. Yeah.
I think I can't remember. I think we might have. Maybe that's why you remember it, and then we deleted it once it got there. Maybe. Let me see.
Yeah, maybe you did delete it. No, we passed it.
No, we passed it. Then I deleted
Yeah,
it because
yeah.
ABCD plus the 50% of the square looked like the thing, that looked like
Exactly.
it could hold. But yeah. Oh man, that reminds me. Just give me 2 minutes. When you said ABCD, I just remembered something on the NVIDIA chart. I wanted to show you
Okay.
guys, and I
Okay.
forgot. Anyway, just to wrap up with the Hang Seng. Again, we're
It's
on
on key support.
Yeah, key support with an ABCD target right below. So it's possible that we get down there. And that target is about 18,410. Is
Mhm.
that? We forgot to cover the yen because few people have been asking for the yen. And I just wanted to spend a minute on it because we covered that
On the Wednesday show.
on the Wednesday show. Basically, the high squared out. So 135 by 45. And I would expect some kind of consolidation or some kind of a little bit of a rest before we take it out. So
It looks like that's what you're getting, a little chop.
yeah, because of that square. So that's that. But what I wanted to show you was the NVIDIA chart. Hold on. Here, give me a second.
Mm-hmm.
You're going to like this.
We get a 5 point.
So I put the 5 point on here just to see where the ABCD would come in. And really the Gartley comes in right here at the high. But the more important thing is the equilibrium lines. You can
Wow.
see how it's cutting right
Mm-hmm.
pretty much right along the highs here. False break came right above and came back just like it could if it's not going any higher. So I just want to show you that. And also, obviously, we had a ABCD square. ABCD.
And your XB lines was good too. Look at the pause there twice.
Yeah. The whole thing lined up. Here's the so there's a box. You can see we were
Wow.
obviously pretty sloppy. We're all over the place. And thus, this is the reason why we need a box. So,
Mm-hmm.
but you can see how we contained it right at the upper end of it, right? See that?
Mm-hmm.
Right around
Yeah.
150.
Yep.
And but
That's
I thought the
good
interesting thing was the equilibrium lines,
for sure. It's
we'd held
really
it. So
good.
now, if we trade below that, then the next target becomes down here, which is pretty close to the 50% line, 50%
Yep.
level. All right. So that rounds it up. That's all I got. Let me put it back to you and we'll
Very good. That was like a trip around the world.
well,
Good stuff.
all right. Look who's struggling to make new highs.
Speaking of markets closing right at the lines,
Hey, there you go. Again,
this is the key spot. I mean, we talked about it last weekend. We talked
838.
about it.
I
Yep.
remember that.
We talked about it on the midweek show. So we're battling here. It's 3 days in a row. We tapped it from below there. We pushed above, closed below. Today we pushed above and closed above. So we got to see if next week if we can clear it. If we
Mhm.
clear it, then it can attack the highs here. If we can't clear it, then we got a lower high in place off that high. So it's we you want to go back and see all the time counts and cycles and everything that came there. That's why we're diligently watching this counter trend to see if it's going to be a lower high.
Mhm.
So we'll see. Let's look at the weekly. Same thing on the weekly.
Yep.
The number's up a little bit, but it's in the same area, 21,000 there.
Mhm.
Here we had a down week, right? Because we took out last week's low. So now it's going to be interesting to see next week. Do we get a reversal bar or do we get an inside bar or do we get another down bar?
Right.
But since it's a weekly, we'll have the shortened week to see what happens there. But here, on weekly basis, we got to close above 21,000. And then monthly, same story. This one's right on the line, 28.78.
Nice.
So we know we are in the bottom line is we are in a very important area for the NQs
Yeah.
because we have full square resistance, we have half square resistance, monthly, weekly, daily. So we'll get the resolution hopefully soon. We start clearing those levels. We know we're going higher. We get stuck under. The weight of evidence says we're going down. Anything to add here on the NQs, Barry?
No, good coverage on the NQs. I mean, really, like I said, once you get stuck at a level, we really have to wait to see which side it tips. Either we're going to get above is 838 or not. So
Yeah.
we'll have to deal with that,
When it happens. I mean, and today intraday was funny. You and I were talking as we were watching it. It would go up and hit it, and then would sell off hard. It would go up and hit it, and would sell off hard.
Mhm.
I mean, intraday it was having a hell of a battle. So we'll see. We'll see what happens. Let's go to one of the stars of the week. And that's Bitcoin.
Mhm.
We
Held
were
above
talking.
that square pretty well.
Yeah, we were talking here.
Mhm.
The latter part of or last weekend we were talking about. We got to get above 91,047 to get to 96. Well, you can see what happened here. We battled for 4 or 5 days. Going into the earlier November. Once we cleared, headed right up. And now today we got a bar that cleared the full square.
Mhm.
So the next target here is 102,000. As long as we're above this 96.6, 102,000 is your number. You can clearly see that we're in like the vertical stage. But the good news is we know what numbers are going to tell us when this is over. Like if we start getting stuck below here, we say, okay, good chance the high is in. But for now, it's moving on. 102, next target.
Yep.
Let's look at the monthly. So we thought the circle was going to stop it. So
Mhm.
far, though, and then we said, hey, if we start trading above this 93,000, it means we're breaking out of the circle and we're going up to 111,000. So if we get a monthly print up in here, it's going to be a good sign. And then we see how the December bar goes. As long as the low can stay above 93,000, the path of least resistance is 111.
This is a fifth, right? On the
It sure looks like it, right? There's first leg,
uh,
second leg, and this is the third leg.
yeah.
And on the daily, you can see a similar type of thing, right? You got first leg, second leg, third leg.
Yep. Yep. All right.
So, I mean, it's up and away right now for Bitcoin. You see the levels, watch your levels. If you're long, make sure you watch these levels to see when the risk may shift. On the commodity side, we're going to talk about corn, coffee, and nat gas. Wheat and beans both are going sideways, kind of building their base still. So I didn't want to bring them on the show. In the other commodities, the other softs, sugar pulled back, cotton is sideways, cocoa's roofing again, but that's within a huge range. So, but we'll talk about coffee. You talked about gold, silver, still sort of correcting. It's bounced a little, not nearly as strongly as gold. Like, for example, gold had a weekly up bar, silver had a weekly inside bar. So silver's still sort of digesting the move and correcting and consolidating. Crude you covered, we'll cover nat gas. So let's start with corn. That was just a quick spin around commodity world. So here's corn. The thing that I want you to notice on this chart, and we talked about it last week, as these trend lines start getting steeper, this is when we get the acceleration, when momentum kicks in.
Right.
And you can see it right here. Right. This low couldn't even come down to the trend line. So now I put a 1 by 1 here on that low. And we could start ramping. The key thing is we want to get above this 447.25, the half square here. We get above that half square, it opens up the full square up here. And if we can get up to that full square, then all this price action for the last year or so is underneath us. Year and a half, actually. But anyway, you can see the downtrend line is broken. We retested here, and now we're ready to go. So corn seems to be leading the grains at this moment. Let's take a look at the weekly. Weekly gives you a nice sort of a cleaner picture of it, right?
Yeah.
You break the steep trend line, the steep downtrend line, came back, tested it, and now we're pushing up. Like three out of the last 5 weeks have been up. And here we made another higher high. Right? We were waiting last week to see if we could make a higher high on the week. So we got a low, high, higher low, higher high on the weekly. Exactly what you want to see coming out of the hole.
Yep.
So here, as long as we're above 412, 517 is the magnet. And you can see what that does for us when we get up there. Right, this whole structure will be below us. So the weekly looks good. Let's look at the monthly. Monthly, we've got our third up month in a row, working on that so far. The key thing I wanted to show you here was we did from this secondary low, like when we came out of the hole in 2005, we made a spike, a sharp pullback, and then we made a final high. From low to high there was 36 months. So if we project out 36 months, it puts us into August of 2027. We can also do it low to high, right? 90 months. We take 90 months from the low in 2020. It puts us into January of 28. So it's like a 6-month window there using those two things. So 2027, 2020, late 2027, early 2028 is where we could see the bull market highs next here. Monthly basis, 462.75 is key, and you can see why. Close above that, you're on top of this whole thing at like 6-7 year consolidation. So that's the big marker monthly basis. And that's why corn, I think, is leading, and corn looks good. Anything to add here? Anything you want to point out?
Well, I think it's a quiet start, but it's technically clean and pretty much set to go.
Yeah.
Yeah.
The table's set. Now we got to see if price is going to oblige. First marker is daily basis 447. Get above that, then we're started capturing ground. If you want to use it in war terms, see how we would be capturing a half square, and that would be good. All right, let's jump to coffee, which had a very good week. And although if you're a coffee drinker, it probably is not a good week because your coffee's getting more expensive.
Cocoa, coffee, everything's good.
Chocolate and coffee going up. Look at that, man. Nice week, huh?
Yeah, very good week. Yep. Well, that 282 was the level, right? We
Yeah,
got,
we were here, right?
yeah.
We closed here last week and we said, okay, if we
Mhm.
can sit on top of 282, we're going. And there we are.
And we went
And we went
305.
and so now 305 is the next, right?
Mhm.
If we consolidate there, we slow down. Don't be surprised. You just have to watch and see. Because if we sit on top of it, then 327 is next.
Mhm.
And when these things go, they go. So that's the good thing about these commodities is they're really harmonic, and when they go, they move. And you can see this week, I mean, we moved
Did you
a
see
half
that
square
double inside bar getting taken out to the upside early November? Right
right
there.
here, right here.
And
Yeah.
there you go.
Yep. And then it moves half square quick. Boom,
Yeah,
boom, boom.
3 days.
Here, boom, 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 straight up.
Done.
And you can see it even better on the when we zoom out a little bit. So let's look at the weekly. Now here's your level on the weekly. Look at we were talking about triangles and consolidations and the breaks that come. There it was, right?
Hmm.
Back in late last year, early this year, had to move up, came back and tested. See how it captures the squares?
Yeah, yeah, very nice.
This was what kind of threw people off because it just chopping
Well, it did
around,
square out at the high, so you'd
and it
expect
did
some
square
kind of.
out.
Mhm.
Yep, yep.
Hey, what's the time count from that low to the high today?
So here's what I did. Again, this was like sort of if you look, let's go back and look at history. So here we had the first move up,
33 weeks. Go ahead.
then a pullback,
Mhm.
and then from this low to the high of that run
It's
was
90.
90 weeks, right?
Mhm.
So I said, okay, here's your first up, first pullback. So if we project out 90 weeks, this run looks like to next July of
Wow.
2025. If we get a similar,
Hmm.
time expansion as we did in this cycle, and it's set up the same way, right? Like first move, pull back, run to the 90 weeks to the high. First move, pull back with a higher low, next run to the high.
Hmm. And
So
what is it now? Is it
where are we time wise?
mhm,
Looks like it's about probably 50 something.
50 something? Okay.
Yeah, so far.
60 weeks.
Yeah.
Hey, that's not bad.
Yep.
That's kind of a mhm.
It's nice.
Yep.
So here, weekly basis, we want to see if we can get a weekly bar with a low at or above 299. If it
Mhm.
does, 325 is next. Now let's look at the monthly. Now remember, this said this for this leg on a weekly, it was talking about July of 25 because we're going to look
Right.
at the same on a monthly basis. So monthly, you could see here, big. Well, this is crazy, right? You had an inside bar. We took out the
Side
low, and then
reversal.
we took out the high.
Mhm.
So,
That's
but
how the big boys do it.
yes, sir. So there's 283 is the number. We're well above that now, obviously at 302. If we stay on top of this, 343 is next. Timing wise, low to high 30,
30, 30,
low
30.
to high 30, high to low 30, high to low 30. It likes 30. So I said, okay,
Dang.
let's put a 30 on here and see. 30 months puts us
July.
July 2025.
All
What did
right.
we say about the weekly?
Buy the pullbacks?
July 2025.
Yeah.
That's
Very
nice
nice.
confluence, right?
Yeah, very nice.
So the bull run, if these cycles play out, we got another 7, 8 months of a bull here.
I mean, just to eyeball it, anything above that 222 number looks pretty solid in any kind of a pullback or any mayhem.
Really solid. Because think, and maybe it does the gold, like maybe we consolidate here, which would be, frustrate people. But look what it would be doing. It'd be consolidating right
Mm.
near the previous highs.
Yep.
Your coffee's going to cost more. Just understand that if you're a coffee
Mm.
drinker. Anything else you want to add here on the coffee?
No, we're good.
Okay. And lastly, we go to our old friend, old faithful that we love to talk about, nat gas.
Hmm.
We've been watching this massive base build for a long time. When we get to the monthly, I'll talk about something you and I said, but
Hmm.
we triangulated the lows here, and then we started building, right?
Yep.
Frustratingly building. Here's another example of increasing angle of trend lines, right? You have this trend line, Then we drew this one in last week.
Mhm.
And when you start getting these steeper angles, that's when the momentum starts kicking in. Now here at the high, you can see what we did. We double topped and we got a pretty big reaction off of it. So
Bit
we
of a
want to watch.
potential false break too over there.
Yeah, potential. Yep. So we want
I
to
mean,
watch.
to the November high. I mean, October highs in 23,
Hmm. Yeah.
right?
Yeah.
Did that?
Right. It was,
No, we didn't. Did it?
no, not a false break, more of a double top.
Okay, got it, got it.
But let's watch the pullback. We had a pullback today. Let's see where the pullbacks go. Obviously, anything that holds this 279, 280 area is going to be bullish and look good.
Yeah.
But this is what we want to see. We want to see now, can we capture this half square? Because if you look left below that line, you can see almost the entire 2-year consolidation is below there. So this 341, 342 is really, really important. Sit on top of that, and then we've got this to support us. Let's look at the weekly. Big triangle break.
Mhm.
And look, it even gave it a little kiss goodbye right here
Yep,
before it took off.
yep, yep.
So weekly basis, and you can see why 371 is pretty important. So we get weekly close and a full bar over 371. We're sitting on top of a 2-year consolidation, which is a really nice base to go. I mean, look over here. Just look at the base we had that launched it up there. Right? You
Yeah.
had a breakout, pullback, tested it, and then went up to the terminal highs. Here, low to high 90. So I said, let's see if we do low to high. Let me give that a 90. I don't know why that's 89. We do 90 there, could run to November of 2025, another year. So let's see if that plays out. Right. And that was roughly off the low here. Let's try the monthly. Take a look at the monthly. Big triangle breaking
Mhm.
out. Monthly basis. Looks like we're going to get a close outside of the triangle, and then we can move. Key numbers here is 488.
Mm-hmm.
That's the half square. So once we get going and can sit on top of that, it opens up, much bigger numbers there. From a timing standpoint, before we go to the timing, if you remember, Barry, when we came down in here, we just kind of looked left and said, man, this is a value area. Every time price has gotten down in here, it's been a good value.
Yep.
Going all the way back to 1995.
Yep.
And it turned, the low.
Wasn't going to be wrong this time.
No,
So-
buying in the 160s was in hindsight was a good thing, but we said it real time because of just the
pretty much
support.
doubled, right?
Yeah, the support you've seen there. Now, timing wise, there's some interesting stuff here. 45 low to high after the first peak, right?
Mm-hmm.
Low to high 90. So I said let's see what that projects out full market for us, right? So low to high September of 2027.
Mm-hmm.
The low after the first push up, 45, takes us to November of 2027. So there's potential for good run here in this market
Absolutely.
from a timing standpoint.
Mm-hmm.
We're very early. This has been a triangle that's frustrated everybody, but the break is here. Now we just got to manage it and find good entries and good ways to to play this potential bull market that has a couple years to run,
Mm-hmm.
based on past cycles. Anything you want to add here on that gas?
No, just that we've been following it, and now we picked out exact breakout on the weekly basis. So now it's just a matter of trading it to the long side, and it's just like we're waiting for the lower highs. We watch for the higher lows.
That's right. That's right. We want to see it capture ground on the squares, right? Start capturing a half square by half square by half square, and then you can just
And then all of a sudden by full square by full square.
right, when it really gets rampant. Yeah, no question.
Mhm.
The topic today, Barry, that's it for the commodities. I gave you a quick overview of the ones that we're not covering. We got corn, coffee, and nat gas that look good and are ready for trading. Um, I think one of the things that I wanted you to address, Barry, and discuss with you is sort of when you anticipate something in the market, right? You think it's going to do something, so you're anticipating
Hmm.
either by, just some people with a gut feeling, or others when you have your indicators or your system or whatever, you're anticipating the market's going to do something. And I know you and I have talked about, while you want to have good analysis, the anticipation of something can actually be your enemy because it can prevent you from seeing things.
Hmm.
Like, and I think you and I actually boiled it down to a trite saying, which is anticipation is the enemy of your perception.
For sure.
Can
Yeah.
you talk about that in the time we have left, and let's kind of go over that to
Yeah,
help
I mean,
people.
it's a big topic, and it gets us into, a lot of the psychology of trading, and it's, it's one of those slippery topics, right? Because we can think about it today and think, oh yeah, I got it, I understand that, but then 7 days later we're trading in the heat of battle. You tend to forget that because the mind sort of takes over, and it's just, I think it's a natural thing where we have to act along the lines of what we believe, right? I think it's probably rooted in that.
Hmm.
But unfortunately, market environment, it doesn't really support that kind of thinking because you can get killed. Therefore, so what do we have? We develop systems, we develop methods, strategies to compensate for the way our minds work around risk and fear and greed and all of this, let alone anticipating something, some kind of an outcome. But I think to narrow it down, I mean, one of the things that we anticipate, like, take a good example. If you take the squares, we see a high come in, then we talk about it. Well, we have a potential high here. What are we anticipating? Well, we're anticipating it to trade lower. And some of the signs we would like to see, their common sign would be a lower high, some kind of a pattern that unfolds in the opposite direction, like a change in trend pattern. These are the things we're expecting to see. And so the point is, if you only look at that, what happens is, if the market is giving you all the signs that is going higher, you'll miss it. You'll just be blind to it.
Hmm.
And I know I've been in those places, and I'm sure you have. Everybody has,
Oh my God, yeah. I
right?
mean, Mark Douglas talks about it, right? When you expect the market to do something, you start only looking for and noticing information that supports your
That
thesis
theory,
or your
exactly,
bias, right?
exactly. And the price you pay is you're blind for the to everything else. So I
Right.
guess I mean, the thing is, you can't completely not have any idea. And that would work if we have a very efficient system. Then you just take the system, the entry, your exit procedure, your trade management, and you just mechanically execute that. And which is great, that works. But I don't know how many people have the sort of the mental discipline to do that without getting all personal about it and getting all dramatic and having your ego involved in the trading. And I think that because of all those shortcomings, I think one of the easiest ways is to just be conscious of it and know, next 3 bars could change everything, blow all your research into pieces. And always know that. You could be right 100 times, but the 101st time could be the time when things go the other way. And of course, because of all of that, we have risk management, we have, stops and how we manage those things, trade management, all of that stuff comes in. So it looks like, we have this sort of a blind spot, and knowing that traders over the years, have developed all kinds of solutions to trap that, or to stay safe from that.
Hmm.
But I think day to day, it makes life a lot simpler if whatever bias you have. Let's say right now we're looking at the S&P Classic, right? We're looking at these highs that came in, and theoretically we should have some kind of a correction. But does it have to happen here? No, it could happen in another week, 3 weeks, 5 weeks, for all I know, 10 weeks. But the thing is, what we say and what we believe, what the research says, is not exactly what we trade. We still wait. That's why when we talk about these things, we say, hey, if it holds above, you have to trade the long side, but then you have to wait for your system to give those buy signals, right? Then you take the
Hmm.
buys. So
Hmm.
natural gas, if it gets above a certain level, from there on, we're not going to trade the short side. It'll just be the long side. And so that would be the system, right? We have levels, we have systems. We kind of mitigate it through tightly managing the frame, the squares into squares.
Mhm.
But still, it doesn't, like today's intraday was a great one. Is it going to break out, or are we going to sell off? And what happened? Neither. So what do we do? We
Right,
just chop
right.
sideways. And but if you have a bias like, oh, it's got to go down, I'm sure people are sitting there selling it every time it comes up to the resistance, and then uh, thinking it's going to go lower. It doesn't. It comes back up. So I think all of that gets frustrating. So my only thing I can say is, look, we have these blind spots, and I think natural we just have it by nature. And in other areas of life, I think it helps us. So that we can't just disregard them. But when it comes to the market, I think we need to know that they exist and come up with some methods and some strategies to help us stay out of getting involved in the whole egoic thing or the mind trip or however you want to frame that.
Mhm.
Oh, it's got to go down or it's got to go to the moon. So that's got to what's got to happen. And if I believe that, then I better be trading that way. So one thing is to definitely separate the what we believe to what's really happening, right? Two different things. And what's really happening, to be flexible, to know, hey, it can change anytime. And I think the reason that we work with levels a lot, because it helps us have very tight management over what the mind would think about something. So that's why we look at the weeklies and monthlies. We get the bigger picture. Okay, so this is what's happening in the big picture. But as we narrow down into the sort of the battlefield level, the foxhole level, then you have to have very tight strategies or framing to know if it's above this, it means this. If it's below this, it could mean that. And even with that, you still have to have flexibility to know, if it gets above your level, well, it blows out the trade. You have to wait. And so what does all of that mean? All of that really, for me, it just brings you back to having a solid system that you trust. And that
Mhm.
takes testing, back testing, and know what your win-loss ratios are, and how you manage, how you exit the trade. Once you have those mapped out, then I think it's very difficult to get caught in those because you're disciplined in following your system, right? So
It's
that
like you have circuit breakers that prevent you from destroying yourself.
for sure. And also to succeed in this environment, you
Yeah.
need some kind of a strategy and a method of approaching it, because the mind, like I say, we have a big drop in the morning at the open, mind is trying to make sense out of it, or the mind naturally does all these things that it's sort of trained to do or conditioned to do.
Mhm.
And we can't really trade while the mind is thinking all these scary things or happy thoughts, or or the greedy thought. You know what I mean? You can't.
Yeah, yeah.
So while the mind is doing all that, great. So you have to really put it in compartments and say, okay, that mind that works on the domestic stuff or the life outside of trading will have to behave a certain way. But when it comes to trading, we really have to have some rules or a strategy that we can. So I would say what sort of hard coded blind spots.
Sure, sure.
You know.
On that note,
Mhm.
we'll wrap it up for this week. We will be recording next week, so we'll try to make sure you have your weekly videos next week. Please, as Barry said earlier, if you like the work, share the links with your friends, subscribe, ring the bell, help us grow the channel. This year's been great with the growth in the channel, and we'd like to continue that. And we're grateful for you guys helping us do that. And have a great weekend, and we'll talk to you next week during Turkey Week. Great
Yep.
job, Barry. We'll talk next week.
Thanks, Ben. Good job. And we'll see you guys. Yeah, rest up, and we'll see you guys on the midweek show.
Terrific. Take care.
Bye bye.
Bye.